Nirmal Bang, ladies and gentlemen. I'm Hiral Bhatia. We have with us Riya Singh, Senior Research Analyst, Currencies, joining in. Welcome to the show, Riya. My first question coming to you is, how are you seeing the dollar index move, especially taking into consideration two important data points that came out of the US late last evening?
Yes, see, the quarterly numbers were very important because, of course, if you look at the past few months, so the story has been revolving around inflation. Now, I think the market has shifted its focus from inflation to recession and is looking at the cues uh, that will help the market to, support that sentiment. So when the numbers came at negative 1.6, it showed that the US economy is contracting. And on top of that, if you look at the comments that has come from the Fed, he has clearly shown that they are quite aggressive with the rate hikes, and unless the inflation comes down, they'll be quite aggressive towards the inflation. So this will trigger, a slowdown on the economic recovery as well, and this is what market is catching right now. And we then, after the statement, we saw the dollar index, heading towards 105 levels. So even in the intraday, it has maintained that levels. And if you see at the yields have come down, indicating that buying is happening into the bonds as well. So safe havens are kind of a story right now that the market is catching on. And I think going forward, dollar index will remain on the stronger side. So 103 to 105 was the range, and it breached that range. And I think it will settle around 104 is the average that dollar index will hold on to going forward.
Right. So if this is the range that we are seeing in terms of the dollar index, how are you seeing the Indian rupee to react?
Well, Indian rupee has already depreciated. I think on the expiry day itself, it depreciated quite sharply. So in the today's intraday session, we did see some RBI intervention that has happened. And this is one of the reasons we saw the gap down. But of course, it's not sustainable. We are seeing a consolidation here. If it had to be, if the momentum was towards appreciation or towards the bearish side, we could have seen the same into the intraday session itself. But since it went into a consolidation phase, it is clearly signaling that rupee is on the depreciative aggressive phase. Now, if you look at the statement from the RBI, they have changed the statement from working towards not letting the rupee depreciate very aggressively to controlling the volatility of the Indian rupee. And if you look at what they have done in terms of intervention, so working into the forward market to bring down the premium is kind of creating a short, or you can say, there is a flow of dollar that is happening in the forward contract, but there is a shortage that is there into the spot market. And this is what triggering aggressive depreciation into the Indian rupee, because the importers and the hedgers are going forward, are doing, taking advantage of the spread that they are getting into the forward market. So Indian rupee will hold off with the 79 levels. I think 78 is the new base that it has created. And I'm not seeing it breaching that base, at least in this current contract. So buy on dips is what the Indian rupee will be for, as far as the strategy is concerned, for the entire month.
Right. And overall, in terms of any other currencies as well, anything that is of highlight?
I think pound, on the central bank panel discussion that was held by the ECB, Bank of England and ECB both have come forward with saying that they'll be working towards the inflation. So the highlight of the meeting was the inflation. And if you look at the euro and pound, it has fallen quite a bit after the statements. So right now, the currency is reacting in a very different way. Whenever there was in a traditional speaking terms, whenever there was a rate hike, currency used to get stronger. But if you look at the current momentum, ECB coming out and giving its nod towards the rate hike, Bank of England saying that 25 bips is not enough, and they'll be even considering 50 bips in the coming July, in the coming up meeting. So this should have triggered a a stronger hold of of the home currencies of those countries, but that is not happening because a stronger policy means that the credit growth will get hampered, and there will be a liquidity crunch which will hamper the GDP growth or the economic recovery. Now, if you look at the euro itself, Italy is debt ridden, and there is a lot of the inflation is at a 10% high. In UK, the cost of living is high, where the Bank of England wants to rate hikes, want to go for rate hikes, but the underlying people are protesting for a pay hike due to the higher cost of living. So this is a very contradictory situations that we are right now, and the major picture that one needs to see right now is recession. How the market is countering the recession picture. So going forward, I think pound and euro will continue to be on the lower side as compared to the dollar, and it will remain under pressure.
Right. So overall, what are the strategies that you would recommend, Ria?
The strategies that you can go forward is going long into the JPY INR. I think it has corrected against the dollar quite a bit. The Japanese yen itself, it did see a sharp highlight to above the levels of 136 and beyond. But I think it will cool off, and you can see JPY INR falling that footstep, and you can buy JPY INR above the level of 58.32 with the SL at 58 and target at 58.50, 58.75. What you can do for USD INR is follow the range, because if you look at the intraday sessions, it has been into quite a consolidated phase, and 79.20 is the resistance that I'm seeing. If it goes beyond that, you can definitely see the range of 79.40, 79.67. Maintain a support of 78.90. So overall on the USD INR, it is buy on dips, but just follow these ranges for right now. So these are the few, levels and strategies you can follow for the coming sessions.
Thank you, Ria. Thank you so much for joining us on the show, and thank you, participants, as well.
Thank you, Iran.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.